Welcome to the deep dive. We're looking today at, well, a pretty wild ride in the global financial markets back in April 2025.
Yeah, definitely a roller coaster month. We've been digging through reports from places like Reuters, the FT, CNBC, MarketWatch.
Barron's, the Wall Street Journal, the
Yeah.
usual suspects, and they all paint this picture of dramatic swings, big drops, sharp recoveries.
Absolutely. Markets felt really on edge, reacting, very sharply to every development.
So our mission for you today is to unpack all that. What were the key triggers? How did markets react? And sort of what does it all mean without drowning you in jargon?
Let's get into it. It really kicked off in early April, didn't it? A major escalation in the U.S.-China trade situation.
Right. What exactly happened there? The reports mention specific actions on April 2nd.
Uh-huh. The U.S. announced some pretty sweeping measures. A 10% blanket import duty, basically hitting almost everything coming in.
Wow, okay. 10% across the board.
Yeah, and on top of that, some much steeper tariffs aimed at specific countries, China obviously being a key target.
And China's reaction, I gather it wasn't exactly low-key.
No, not at all. Beijing retaliated almost immediately, slapped tariffs on U.S. goods, some going as high as 125%.
125%. Okay.
And the financial press was already buzzing, anticipating that other U.S. trading partners might be next and could bring in their own countermeasures, sort of a domino effect fear.
So with these big moves happening, the markets, I assume they didn't take it well.
No, it was pretty rough. We saw a swift global market plunge. Just to give you a sense of the scale, the S&P 500 lost something like $6 trillion in value.
6 trillion.
In how long? Over just 4 days. It shows how sensitive things were, especially with market value often concentrated in just a few big tech names. Tariffs like these hit hard.
Incredible. 6 trillion in less than a week. And this wasn't just a US problem, right? It went global.
Oh, absolutely global. Hong Kong's Hang Seng Index got hammered. It fell 13.3% in a single day.
13%. That's huge.
Yeah, its worst day since the Asian financial crisis back in '97. And Japan's Nikkei, it officially tipped into a bear market.
Meaning down 20% from its peak.
Exactly, a 20% drop. That definitely spooks investors.
You bet. So beyond the numbers, what were the sort of background worries? What was the chatter about?
Well, the immediate fear was recession. Would this trade war escalation push fragile economies over the edge?
Right. Recession talk definitely picked up.
Yeah, and you saw central banks starting to make noises, hinting they might need to step in, provide some support.
Any other ripple effects noted in the sources?
One interesting side note was that the UK and India apparently accelerated talks on their own trade deal. Maybe seeing this as a moment to, shore up other partnerships.
Diversification in uncertain times makes sense. Okay, so a really turbulent start to the month. But things didn't stay that way. There was a shift later in April.
That's right. Towards the end of the month, the dynamic changed. The U.S. announced a pause.
A pause on the tariffs.
A 90-day pause on implementing new tariffs.
Yeah.
Importantly, though, this didn't apply to the existing ones on China, but negotiations reportedly restarted with most other partners.
Ah, okay. So some breathing room, but not for everyone. How did the markets take that news?
Like a massive sigh of relief, it triggered what everyone called a relief rally.
Ah.
Big jumps across global markets.
How big are we talking?
Well, the S&P 500 surged 9.5% in one day.
9.5% after that huge drop.
Yeah. And the Nikkei in Japan jumped 9.1%. That was its biggest single-day gain since way back in 1987.
Wow, historic gains then. London, too.
London's FTSE 100 also had its strongest day in years. It jumped 3% on April 10th, the day the news seemed to really sink in.
So a pretty dramatic turnaround, but I guess the key question is, did this pause actually fix anything fundamental?
And that's the crux of it, really.
Yeah.
No. While it eased the immediate panic, those underlying trade tensions, especially U.S.-China, were still very much there.
So the truce was fragile.
You could say that. And the overall outlook for economic growth, it remained pretty cautious. This rally felt more like, temporary relief than a sign everything was okay again.
Got it. Okay, so with that overview of the month's ups and downs, let's maybe zoom in a bit on how specific major stock indexes actually performed through all this. Starting with the UK's FTSE 100, you mentioned it had a strong day.
It did. It saw that early dip, like everyone else, then the big 3% jump on the 10th. But what's really striking is that despite the volatility, the FTSE actually finished April at a record high, around 8,600 points.
A record high after all that. That is surprising. Okay, what about Japan, the Nikkei? It entered a bear market, you said? Did it recover?
It had that huge 9.1% rebound, its biggest since '87, which was definitely needed after falling 20% from its peak. But even with that big bounce,
But wasn't enough.
it ended April still slightly lower than where it was at the end of March. So a significant recovery, yes, but not a complete one.
Okay, partially recovered. Now, Germany's DAX 40, you'd think they'd be quite exposed, being so export heavy.
And they were. The DAX dropped significantly early on. Reports suggested maybe a 15 to 18%. German car makers, other big exporters, they took a real hit.
Makes sense, given their reliance on global trade.
Exactly. Highly sensitive to any disruption. It did recover somewhat with the tariff pause, but still finished April slightly down overall. And they had another headwind too.
Which was?
The strong euro made their exports more expensive, got a double whammy alongside a tariff threat.
Right, tariff worries and currency challenges. Not ideal. How about France? The CAC 40.
France's CAC 40 also dipped early April, maybe 8 to 10%. The big luxury brands and aerospace companies were mentioned as dragging it down.
But did it bounce back?
It seemed to recover quite well, actually, helped by some strong earnings reports from big French firms, plus the general optimism from the tariff pause. It ended April only slightly down for the month.
Okay.
But importantly, it was still up nearly 4% for the year so far,
Yeah.
so maybe a bit more resilient than the DAX, perhaps.
Interesting. Okay, let's swing back to Asia. Hong Kong's Hang Seng. That 13.3% one-day drop sounds brutal. How did it end the month?
Yeah, that initial reaction to the U.S. tariffs was severe worst day since '97, as we said. And while it did claw back some ground later in April,
It lagged behind.
it definitely lagged behind other global markets, likely because those specific China tariffs stayed in place, even during the broader pause. So the Hang Seng finished April down about 4.5%.
Still down quite a bit then.
Yes, though interestingly, it was still up around 10% year-to-date at that point. So it had a strong start to the year before hitting this turbulence.
Right, context is key. Okay, finally, the S&P 500. Back in the U.S., we know about the $6 trillion initial loss and the big 9.5% rebound. Where did it land at the end of April?
Well, that early panic selling wiped off huge value, around $5.8 trillion, the reports estimated. The rebound was powerful, no doubt, but
yeah.
it wasn't enough to erase the earlier losses.
Yeah.
The S&P 500 actually finished April slightly down overall.
So a losing month despite the rally.
Correct. And that marked its third consecutive monthly decline. Suggests the initial shock lingered, and maybe deeper worries persisted beneath the surface rally.
Okay, so pulling all this together, looking back at that chaotic April 2025, what are the main takeaways for you listening?
Well, I think first and foremost, it just hammered home how interconnected everything is. Global markets are tightly linked.
Yeah, a policy move in one place has immediate, massive effects everywhere else, almost instantly.
Exactly. Trillions of dollars swinging on geopolitical news. It also showed how fast investor mood can change, right?
Definitely. From intense fear, recession worries.
To significant relief and buying, all within a couple of weeks. Shows just how much markets hang on policy signals.
And it's fascinating how different markets weathered the storm differently. The FTSE ending at a record high, while the Nikkei and S&P 500 couldn't quite get back to even.
That variation is really important, and it reminds us that even when a specific pressure point eases, like the 90-day pause,
the underlying problems, the big geopolitical tensions, they often stick around.
they absolutely do, and they can continue to shape what happens next.
Okay, so summing up, April 2025 saw a sharp trade war flare-up, a big market dive, then a partial truth sparking a major but incomplete recovery, with different indexes ending up in very different places.
That captures it pretty well. And for you watching the markets, it's a powerful illustration of that inherent volatility, the interconnectedness, how geopolitical winds can cause sudden, sharp shifts.
Definitely something to keep in mind, which leads to maybe a final thought to leave you with. Considering how sensitive markets were to even a temporary pause in tariffs, how truly stable is market confidence when these bigger geopolitical issues remain unresolved? Something to chew on.
A good question indeed.
Thanks for diving deep with us today.